What's going on, everybody? It's March 22nd, 2023. I'm going to do a review over FOMC and the price action that unfolded today. I'm going to cover a few things. I'm going to cover the dollar index. I want to cover the SMT divergence as well. What I posted a few days ago in regards to the analysis yesterday, in fact, what I was looking at for FOMC and the targets. I stated that I wanted to see, at least on a daily time frame for ES, I wanted to see the BPR revisited. There was buy side liquidity resting above this high at 40.56 and 40.42. I said possibly we could reach up into 41.19. That's if today got animated. Overall, I'm still looking for lower prices. I did state that if you look at the dollar index and you look at the SMT chart on the daily time frame, there was a bullish SMT that was potentially leading to the run up in the beginning of this week. After today and looking at the close of it, I believe we could continue to see lower prices. I'll get into that at the later portion of the video as far as what I see for the rest of the week. But let's go into the 4-hour time frame. So a lot of what today was about, to me at least, was where did price come from? Where is it at now, and where should it go? Those three questions I am constantly asking myself, because the best trades come from higher time frame PD arrays being met or higher time frame premium or discounts being met, and then price is moving away from that on lower time frames, and you see that lower time frame entry pattern. And today was a great example of that. So this balanced price range, all the way back from the 3rd of March, we used it on the 9th of March here, and there's still a remaining portion of the SIBI as well, with the daily BPR nested with that. If you go down to the 1-hour time frame, I think this was, to me, the clearest, and what I was looking at for price to reach into was the remaining portion of this SIBI. So it's actually the high there is the full SIBI, but I was looking at the remaining portion, and I was looking at the equilibrium of that, so the CE, and seeing if price could reach up into there. If we go down to a 15-minute time frame, in here was very back and forth, which is the reason why I'm usually waiting 30 minutes, 45 minutes, maybe an hour after FOMC releases, because there's a lot of manipulation, there's a lot of false Judah swings, and it can be easy to get caught up in these type of environments. But if you wait for FOMC the first 30 minutes, 45 minutes, there's usually nice clean setups that unfold right after it. And the price action itself is actually very clean, but you have to wait, because the beginning of it, and especially 30 minutes, there's another news event driver that releases. So it's an easy way to protect yourself and just tape read, see what price is doing. So if we go down into a 5-minute time frame, and I'm actually going to split screen this so you can look at the 1 minute and you can observe the 5-minute as well. So my charts are looking like this, where I'm having those higher time frame PD arrays still visible on the lower time frame, so I can see when price reaches up into that area. And I'm also looking at a 1-minute time frame and monitoring how price is reacting to those levels. Because if you're not looking at it through that lens, and you're only paying attention to a 1-minute time frame, or you're only paying attention to a higher time frame, it can be easy to get lost, and it can be easy to mess yourself up. And I'm not saying you need multiple monitors or multiple screens, but it does help when you can look at a wide variety of data and look at it all at once to see how price is reacting to certain levels. So these blue lines on the right hand side, this is the same SIBI, and this is the CE of it. So when I'm looking at price, I'm asking if price can move up into this area. So right on the open of FOMC here, we saw push up, then went a fair value gap in here, and we expanded from there into the SIBI there. We displaced lower, and all of this is, I believe the 30-minute mark was right here. So 1 or 2 p.m. New York local time, this is when price, to me, starts to get clean, and when I start to actually look for setups. So I dug into this, SIBI here, which we'll bring that back into attention over here. But price reaches up into a premium relative from that dealing range high there to this dealing range low. And we're seeing price dig up into a premium. We have actually a balanced price range in here. And then we see a sell-off, relative equal lows in here. And then this low here did not get met. And I was looking at the other charts. It seems like, I believe NQ had a bullish SMT. And I was looking at this fair value gap, and I just didn't trust it. And I didn't want to go short in here. And that also has to do with the dollar index. I'll bring that chart up as well. But those type of situations where what qualifies a fair value gap versus what doesn't, and which ones are good ones, which one are bad ones. A, that's experience. B, that's using intermarket relationships. And you're looking at the dollar index, you're looking at the other future contracts, seeing how they're all in tandem or not in tandem with each other. ICT has been talking about this a lot, and this all has to go back to narrative as well, and understanding when you should be looking at high probability setups, what qualifies an entry pattern versus what doesn't. It's a lot more than just a fair value gap inside of a premium or discount, or buy stops, sell stops being ran out. And I think you guys get that point now. Is it's really about using all the data at once, and then leaning on your experience to help you formulate an idea to get into the market or not. So once we expanded above here, we had above this high there. This now becomes a bullish breaker. And this SIBI here can still be used as an inversion. So even though we used it here, we can still use it as confluence for a buy signal to get above the buy side liquidity in here and run further deeper into that SIBI up here, the higher time frame. So this inversion, fair value gap there, and then the breaker in here. So that's a bullish breaker here. Price dips down into that small fair value gap in there as well. So a lot of confluences. IOFED it, and we expand above the buy side liquidity. That's a 5-handle run. So to me, that's 11 handles. That's how large today was moving, or how volatile it's been lately, which is another reason you need to reduce your risk. You need to be very nimble. You need to pick your shots very, very carefully. Your timing needs to be very on point. That's something I'm learning more and more about myself as well. Is it's all about timing. And if you can time it correctly, if you can wait for that right moment, it makes things so much easier. So as soon as we took out the buy side liquidity there, I was looking at the dollar index, and let me pull that up. Let's see what time this was. So right at this time where dollar is reaching, and I'll show it into a BISI, and this is reaching into its higher time frame SIBI. If you look at the daily chart as well for the dollar index, I was annotating how we should gravitate towards this low there, and then the remaining portion of this BISI here. If you look at this as well, we're inside of a very deep discount relative from that dealing range low to that dealing range high. We're in a deep discount. What does that mean? Is if you're looking for shorts in a discount and we haven't had any retracements, it's not as high probability. And that's the reason why we saw a huge sell-off today in ES as well, is because we are inside of a deep premium on the daily time frame. So even though we're looking at a 1-minute time frame, I'm keeping all of these things in the back of my mind, and I'm trying to remember all of them in real time, which is where experience comes into play, is trying to lean on all of that experience to remember all of these things at once. Let me mark up. I was paying attention to the 4-hour BISI resting here. And I was also paying attention to the CE of this BISI as well, which we perfectly hit. Let me do this. All right. So you can see we reached underneath the sell side, and then we reached into that 4-hour BISI plus the CE of it. If you're going down to a 5-minute time frame and you're looking at that low there, and look at the right-hand side where the crosshair is, that's directly where the high was being formed on ES. So right at 1348. Look at 1348 on both charts. It's right where the low is forming. So when you have all these ideas in the back of your mind, it really, really helps you trust and gather information to form a trade idea. So once price broke down here, there was a small SIBI in here, which I missed this. And I wasn't angry or mad at myself. It was just something that happened too quick. I was trying to judge and base if price maybe needed to go into a deeper discount. I was really looking for a couple other confluences. There just wasn't anything on the 2, 3, or 4, or even the 5-minute as far as fair value gaps or something that price could reach a little bit higher into. It just wanted speed. This was a very low resistance liquidity run. If you also look at the left side here, extend this out, balance price range. So hindsight, to me, that's actually a really good entry pattern. Like I said, timing is everything, and you need to be on point. You need to understand how fast price can move away or move to your stop loss or take profit. And seeing this in real time, being able to react is a skill in itself. So to me, that's also a good entry pattern with the idea of the low being formed and the high of the day being formed there, both at respective PD arrays, higher time frame, seeing dollar push higher, which makes this go lower. Just want to see. So that ran today 16 points. Wow. To me, again, that's a great entry pattern. Now, since I missed that, I'm now waiting for something else to play out, something else to make sense to me. I'm not going to chase this. After we get underneath this low here, if we're taking out new lows, what that means is price can move back into a premium, a short-term premium. So once we get underneath significant lows like this, this was the low that created this run up, right? So once we reach underneath that swing low, it now can retrace back into a premium relative from that dealing range high to now the new low, wherever the low forms. And it's the reason why I'm not hunting to go short in here, because I deem that lower probability. So let me go back to a 5-minute on ES. All while I'm trading, I have a 15-minute, I have a 5-minute, and I have a 1-minute time frame all in front of me. I also have SMT as well. So, and I'm shuffling between maybe the 1, 4-hour, and daily just for further information. But I say that because I'm looking at all these things at once, and I was watching in here how price was trading up into the SIBI and it was trading up into this respective SIBI, which is relative from the dealing range high to low. That's inside of a premium. Took out buy side liquidity, ran into a higher time frame SIBI, displaced lower, shift underneath that low there, move up into a premium, 5-minute fair value gap, all nested 3, 2, 1, and the 4-minute. You look at the 1-minute time frame here. This is your bearish breaker. I'm just going to take the bodies, actually. But all of these last down close candles in here, that's your bearish breaker. A lot of confluences. This is a very good setup. And the reason I didn't take a trade right there is because I was looking at the dollar index. I didn't know if it wanted to continue lower. So what I did is I let price prove itself. And I like these type of entry patterns, especially with a higher time frame PD array, even a 5-minute, where it moves up into that. And I'm looking at a 1-minute. Does it displace lower from it? Once it does, we see a displacement. No fair value gaps in here. Comes back up into this 1-minute SIBI, reclaimed. Now, you could go short there. I waited for price to shift underneath that swing low, leaving a fair value gap. As soon as that happens, I can expect an IOFED and then a run to the sell side here. So my entry was right there. And once we displaced into this BISI here at that time, I took all of it off. Why? Because I was up almost 15 handles from that. I believe, right? You can look at my entry in the Telegram. It was right at that low there. So we got underneath it. 15 handles to me is plenty enough. I actually have here. So that was on my actual account, and then I'm just paper trading here. So after I take profit, especially on a day like today, I'm not going to go back into the market and try to get more than what I just got. I'm completely content with what I had today. And especially days like this where price is very volatile, it's moving very fast. You can't just get in and out expecting to win every single time. And that's when greed will kick in and overconfidence will kick in. And those type of days will ruin you if you let it. So take what you can get. That's the reason why I paper traded this. So once we broke underneath this BISI here, this now turns into a inversion fair value gap. We move up into that. Look at the body closures. If you monitor the 2 and 3 minute time frame here, there's a SIBI there. You look at the 2 minute. 2 minute was, I believe, the cleanest to me. Balanced price range in here. Move up into there, and then we displace it underneath the sell side. So to me, today was absolutely beautiful in terms of price. If you looked at grading the swing here from this dealing range high to low and seeing where potential targets could have played out, moved all the way down to 39.75. The low of the day there was at 39.71. So not too bad. I believe there's a few other things in here. That's what I wanted to bring up. If you look at the daily time frame SMT chart, to me, this is another reason why I was looking for lower prices. NQ was getting above this high here, which I mentioned on Sunday that NQ looked really bullish to me, and I was wondering if we could get above that buy side. Do I believe these will follow suit? I don't think so. I think NQ can drop lower now, and these will continue lower. We have a bearish order block here on the close of today. So if we can use that, if you look at the weekly time frame, ES is coming off its bearish order block. So if tomorrow and Friday we can see a really nice expansion lower, that would be fantastic. But that was the reasoning why I was looking for lower prices as soon as we hit that higher time frame SIBI up here. And I think that's going to be it for today. Until next time, good luck and good trading, everybody. Be safe.